Hello, and welcome to this segment of the LA Blockchain Summit. My name is Casey Henry, but most of you guys in the space know me as Crypto Casey from my YouTube channel. I'd like to introduce you to a panelist. We're going to be discussing tips on navigating crypto's new financial wave. So with me, I have Talal Tabbaa, the co-founder and COO of Jibrel Network, a blockchain-based fintech company bridging the gap between traditional and crypto economies. So welcome.
Pleasure to meet you, Casey. Happy to be the panelist, I guess, on this panel.
Yes, thanks for showing up. So we have a very broad, interesting topic to explore together. So I think we're going to have some interesting conversation. To start things off, I think one of the biggest themes people need to keep in mind with navigating this new financial wave in cryptocurrency is the infancy of the space technologically. So where do you think we are on this timeline, personally?
All right, so I think when we talk about infancy, technology is only one of them. Regulatory infancy is another. We've seen how regulators have reactively punished companies that basically broke the law, even though the law wasn't really clear. That's one thing. There's also the element of trust. Anyone watching this panel is probably manages their own private keys and is comfortable dealing with that. But that's not the majority of the people. That's actually quite a few. MetaMask recently announced that they have 1 million users. That's a drop in the ocean if you think about it, really. Like, for example, when we talk about how we're still in infancy stages, if you want to talk about like global mass adoption, for example, where I'm from, for example, in Jordan, the banked population is less than 30%. So if you think of like, that's people that have access to financial services using traditional online banking or whatever. So when you talk about crypto, it's still really, really early on. And I think that the technology will probably mature way before user or consumer behavior will, or regulations.
Sure, that makes sense. So do you see that there's larger adoption in countries where they are unbanked? Are they coming into the space faster than, the West over here?
I wouldn't say so.
Okay.
I wouldn't say faster than the West or the East. But I guess technology that's disruptive usually allows countries to leapfrog existing or leapfrog stages of technology. For example, there's many places in like rural Jordan or Africa where they never had landlines. They literally switched from like calling people or like sending letters and into mobile phones. They skipped landlines, whereas in Europe, US, etc., they went from like basically minimal communication, landlines, and then mobile. And then what we'll see there with crypto is, yeah, we'll definitely see, let's say, developing countries adopt payment rails that are based on blockchains and digital assets, because it's a lot more efficient. And then a lot of the legacy infrastructure doesn't need to be built. It's much leaner.
Interesting. So you're saying that these countries have an advantage because they're kind of avoiding a transition costs from, hey, you already have a built-in infrastructure, and to take it down and to build something else is, you'd almost rather adopt something than start afresh. And these countries have an interesting opportunity to maybe get ahead and forge ahead.
Yeah, I mean, there's two things to look at, really. First is the infrastructure piece, which we talked about how they could leapfrog old infrastructure. But the other part that's very important is usually these developing countries don't have reliable fiat currencies. For example, like a 2-hour drive up from where I live in Jordan, or my family lives in Jordan, is Lebanon, where they recently suffered insane hyperinflation. And Bitcoin was trading at like 30-40% premium prior to basically shit hitting the fan. Because if you had Bitcoins, you could basically pack up and leave, and then you'd be kind of immune to that inflation. What people were doing were moving this worthless fiat currency that the government was printing into all sorts of weird stuff, including, first of all, you couldn't buy jewelry because all the jewelry was bought and people would take it and sell it abroad. But it reached a point where people were buying electronics, like literally washing machines and stuff, and shipping them out because that was the store of value that was better than holding the local currency.
Right.
So in developing countries, I think censorship resistance being a very important one. So yeah, it's twofold when you talk about developing countries adopting crypto.
Awesome.
With Bitcoin, there's this ethos of separation of state and money, and that's something that I think will be an increasing trend in the coming, I don't know, 5-10 years. Kyrgyzstan today, for example, blocked SWIFT access to all their banks,
Sure.
not allowing anyone to basically wire money outside because they want to stop capital outflows.
Sure. And before you and I discussed a little bit with Jibrel Network, you recently kind of pivoted your business model a little bit, or what you're after. Can you explain a little bit of how you are kind of bridging the gap between, equities and the markets in, your part of the world with the cryptocurrency, allowing startups to have access to these like global funds so they can kind of compete with everybody else?
Yeah, so basically when we set up Gibral in 2017, the idea was to tokenize financial assets, placing traditional financial assets in the form of ERC20 tokens. And we experimented quite a bit. We did the world's first Sukuk transaction, which is like an Islamic version of a bond. Basically, it's like a debt capital markets instrument. And then we did that as a live POC for $1 million. So for a debt capital market transaction, that's peanuts, but still it's not a free POC or like testnet POC.
Sure.
And quite interestingly, the outcome of that POC was, all right, great, you've dropped the operational expenses associated with the instrument by over 90%, but we would have to essentially have transparency on the spread for that instrument, which would eat up all their profits.
Sure.
So we realized that wasn't maybe the best use case. And at the time, zero knowledge proofs weren't as mature as they are today. But yeah, after that, after we experimented a bit in debt capital markets, we basically opened a subsidiary in Abu Dhabi, which is the capital of the United Arab Emirates, where we worked with the regulator to have legally enforceable digital securities. So we conducted an ICO in 2017, and we realized that ICOs were basically a great way for capital formation, but they didn't provide enough investor protection. So
Sure.
if you think of it as like a trade-off, you have velocity of capital and investor protection. ICOs have insane velocity of capital, but very minimal investor protection. Whereas something like, I don't know, the stock market has lower velocity of capital. It closes every day at, I don't know, 3, 5, depending on where you live.
Sure.
It's also off on weekends, etc. But it offers good investor protection. So basically, we launched a platform in Abu Dhabi that allows startups to essentially syndicate deals online. I know that's very common in the US. You have AngelList, obviously, that's been around forever. But that wasn't the case in the Middle East. So we saw an opportunity there. And the reason why we did this in Abu Dhabi is any syndicate is then represented in the form of tokens, which allows you to trade them peer-to-peer. And then we're hoping to also embed that into our peer-to-peer lending platform. So let's say you've made an investment in a startup. You could put that up as collateral and unlock credit. So I guess, past 2 years, we worked a lot on tokenized assets, but the reality is there wasn't a lot of use cases for them online. If you wanted to trade a tokenized asset peer-to-peer, the demand side wasn't there. So that's what we're hoping to change around by basically allowing people to unlock credit from these illiquid assets.
Nice. So I'm going to parlay into actually fees you were talking about and scaling issues that we should be mindful of, people should be mindful of when navigating into the new crypto financial wave. So I know you guys are built on the Ethereum network. And so you guys have seen, drive up in the fees and transaction costs. Go ahead and Can you comment on that? We were talking about a little bit before we started.
Yeah, sure. So I guess when we started off in 2017, we took the decision to basically build a lot of the infrastructure ourselves. We built our own block explorer, wallet, API access to Ethereum. We didn't want to depend on the existing solutions out there. Obviously, that wasn't the best decision, but I guess we learned that the hard way. And because now there's companies that are specialized to solve this. Let's say we wanted to work on L2 solutions. Obviously, Loopring would have done a better job because that's their core focus. So I guess in hindsight, it's easy to say, but when we started, we didn't really know which part of crypto would have been the best avenue. Sure. But when you want to talk about, I guess, fees on Ethereum, for us at Jibrel, we believe that there are other companies that will basically focus on solving that, and eventually gas costs will go down. If you think of Gmail when they first started, they offered like multiples, orders of magnitude more free storage than Hotmail did, even though storage was insanely expensive at the time. But they basically made the bet that online storage, cloud costs basically would go down, and they were losing money in the beginning, but obviously everyone now is on Gmail. So I think the same thing will happen in Ethereum. I'm probably biased because I'm incentivized to think that, but
sure. Well, also another thing that we're going to see in this wave, and we're seeing now, is before we have this tribalism, like, Ethereum versus Cosmos versus, Cardano. And I think everyone is now aiming to be interoperable. And the way that DeFi is operating now, you can almost build on the shoulders of giants. So instead of everyone starting from scratch and competing with each other, the space is becoming very innovative, very coalescing, getting along with each other and headed towards a similar goal. So where do you think that's going to take us, as far as navigating this financial wave? What have you seen with Jibrel?
This is such a cool topic because I don't think this is in the internet age. Not that I was working at the time. I was in school, probably middle school, the time period that I'm talking about. But basically, companies that failed, their IP kind of died with them, right? Whereas in crypto, with stuff being open source, even if a project fails, a lot of that code is reusable. So that's like a paradigm shift that we haven't seen before. If you think of, for example, what happened with Uniswap and SushiSwap, it'll be very interesting to see how different companies use pieces of code. People always talk about modularity, but I don't think I've seen anything as modular as what we're seeing in crypto today. This obviously will have it'll have like very good advantages, and it also have disastrous results. When people use it maliciously, obviously you're going to end up in a suboptimal situation, and we've seen that with a couple of rug pulls where anonymous founders just bounce with the money. And then you have other collaborations, for example, what's happening between Aragon and Balancer with Snapshot and the on-chain governance. That stuff is really cool. And like, if you think of compound synthetics, a lot of DeFi projects are utilizing either their code, their ideas. Like if you just look at Binance Chain and what they've done with Binance Scan, it's literally a copy paste of Etherscan, but it's called Binance. So I haven't really made up my opinion on that, but I think net overall, it's definitely positive.
Cool. You did touch a little bit on some regulatory stuff. So let's talk about the execution and the lag of regulatory action that is in the space right now. So you can go ahead.
Yeah, so basically regulatory arbitrage is on steroids these days.
Sure.
An exchange would be registered in Malta. They get in trouble in Malta. They say they're regulated in Liechtenstein. They say they get in trouble in Liechtenstein. They're regulated somewhere else. So it is insanely hard to govern crypto or Bitcoin or digital assets because they don't respect boundaries of countries and nations. And it's not like you're dealing with a bank that has a capital adequacy ratio that's sitting with the central bank of that jurisdiction. So I think the US has been the one that's been dealing with an iron fist approach, I guess. But that's kind of expected, given that U.S. taxes are applicable on American citizens no matter where they are. But I guess countries are competing to be appealing to crypto projects, or countries that at least acknowledge the importance of it. If you think of Switzerland, if you think of Singapore, Bahrain, Dubai, these countries have opened up their arms and kind of are welcoming these blockchain or digital asset companies because they believe in the future of the industry. But I'm not sure how sustainable like the regulatory arbitrage, I'm not sure how sustainable it's going to be. And then when we see stuff like the US charging BitMEX or John McAfee, I think this is just the tip of the iceberg.
Sure.
Yeah, so interesting times on the regulatory front, that's for sure.
Oh, sure. And I think you would probably agree that in this space right now, we're seeing a lot of, corruption and fraud. However, it's easier to detect because of the transparency and the nature of decentralized applications. And so people might try to say, hey, there's just a lot of fraudulent activity, and this is where criminals go to conduct business, this type of blockchain technology. When in reality, we've been experiencing this it's going on right now. It's been going on, but these centralized entities, within Wall Street, they're able to hide it from us. And then every once in a while, we see it come out in the news. But with cryptocurrency, we're going to see it. Do you think it will help us develop faster or draw some, have some drawbacks, or you think there's a good balance going on right now?
It'll be a slow and painful process. But it's like a kid touching a hot oven, right? You touch it once, you don't care. You touch it the next time, you burn yourself, and you make sure not to touch it the third time. Sure. So I think, for example, Compound is a great example of being able to gain trust of the community over time. MakerDAO, these are projects that have been able to compliantly operate, I guess, because there's multiple verticals you could look at. One is anti-money laundering, the other is securities laws, the other is like private personal information. So I think there's no tolerance from regulators on the anti-money laundering side, and that's kind of understandable. But it's also extremely unfair how, for example, BitMEX were charged and there's jail time, etc. But when the 2008 crisis happened, where a bank is like, if you've seen the FinCEN files and how much money was basically laundered through these banks, no one went to jail. So yeah, it's kind of hypocritical, but it's also expected, right? Crypto exchanges or crypto businesses, no matter whether they're centralized or decentralized, aren't necessarily regulated the same way banks are.
Sure.
And they're feeling the burn of that.
Absolutely. We're going to switch gears to investment strategies that people should be mindful of when navigating this new financial wave. So you did kind of touch on focusing on projects like Compound, MakerDAO, UDSwap. Let's talk about how it's important to make sure that an investment you're making in this space, that the project has longevity in the space and also has sustainable innovation that can be applied to the future. And so what are your thoughts on that?
Cool. So even though I've mentioned Compound, Maker, etc., these as investments are very highly speculative. There is no proven track record for the success of governance tokens, for exchange tokens. These stuff are quite new, so you should be willing to lose all your money. It's a high risk, high reward kind of investment. The same doesn't apply to Bitcoin, though.
Sure.
anyone, I guess, not investment advice, but a significant portion of the portfolio should be in Bitcoin. And then anything that's on the yield farming side, I know that's kind of died off the past week or so because of the number of scams we've seen. But basically, the governance tokens, exchange tokens, anything that's, I guess, experimental is obviously a lot more high risk, potentially high return. And then you have the, I guess, cornerstones like Bitcoin, to some extent Ethereum.
Do you think investors with the yield farming stuff the past month have become desensitized to speculation a little too early on for where we're at developmentally in crypto?
Yeah, of course. And it's actually very funny how no matter what the technology or the rails or the infrastructure are, humans are just greedy and they will do whatever they can to maximize output or whether that's real or not. And what I mean by that is basically in finance, there's the concept of rehypothecation, where you're using the same asset over and over again. And we've kind of seen that in DeFi, where you deposit a token and then you get a token that represents your deposit, and then you take that and use it elsewhere. So yeah, in terms of investment, yeah, people are definitely desensitized. But that happens when, for example, if someone bought Yearn Finance at $2,000 and it reached 40, let's say it dropped 50%, they're still 10x from their initial investment. And in a world of near zero interest rates, free capital is going to make its way to high risk assets. Like if you think who the hell would buy a bond now? Because you're basically not getting returns, and then if inflation or when inflation kicks in, it'll become a pretty bad investment. So there's a lot of macro factors that are pushing investors to higher risk assets, and in crypto, that's something that's readily available.
Sure. And I think you mentioned greed. Greed is a very interesting part of our human nature. It has a lot of bad qualities, but I think some good qualities is it sounds like it drives innovation in this space. And a lot of people that, are making greed-based decisions here, sometimes on the project side, it does create, new developments and interesting things that people otherwise wouldn't think of. For example, with the Sushi Swap and Uniswap finally coming out with a governance token, per se. So I have a question about governance tokens. So big banks and traditional institutions and these centralized exchanges, they have access and command a lot of capital. So what do you think about the concept of them being able to kind of maybe own over 51% of these governance tokens in the DeFi space? Is that something that's realistic, or what do you think?
Okay, so all right, so I think there's obviously a risk there, but basically there's this alignment of incentives. If a company controls 51% of a protocol, people would lose trust in that protocol because then there's an entity that's holding 51%. And forking it and creating a copy that's not controlled, like I'm not sure companies would be incentivized to do that. They would definitely lose money by doing so, because buying up to 51% they'd incur insane slippage and would have to buy at higher prices. But then once they reach 51%, everyone else would sell their tokens because they wouldn't want to work under such a centrally controlled blockchain. But then again, people and companies don't always act rationally. So yeah, of course it's possible.
I'm going to play. Oh, go ahead.
We saw it with Ethereum Classic, right? With the 51% attack.
Mm-hmm. I was going to play devil's advocate for the fees so high on the Ethereum network. We do see people going to Tron and doing some yield farming and other activity over there, even though that is kind of, a centralized situation as well, but people are using it.
Yeah, true. But I think the use of Ethereum and Tron are different. I feel
Sure.
like Tron's use is more like laughs and giggles and trying to make quick returns and stuff. Whereas Ethereum,
Hey,
you
that's
have
yield
both. You
farming
have
on Ethereum.
yeah, that's what I was gonna say. On Ethereum, you have both. You have yield farming, which is obviously just to and there's a lot of the stuff doesn't have substance, but you also have projects that, or not necessarily, even with the same project, you could have stuff that's over the top and similar to what's happening on Tron and trying to make, I don't know, 1,000% APY. But you also have companies are building the piping for the future of financial services and products, because
Sure.
it's a lot more efficient the way that cash flows can become programmatic.
Nice. Well, we're nearing the end of our segment here. So did you have any final remarks, or I think driving new adoption and retaining users, what do you think the viability of that is with, what the current state of affairs?
Yeah, so I think that it differs from one country to the other. I think that in the US, for example, and in Europe, crypto fiat on and off ramps are a commodity now. It's very easy to do. Whereas in other countries of the world, that's really an issue, trying to cash in and out of crypto. So for global adoption, I feel like crypto fiat on and off ramps are required.
Sure.
But yeah, in the beginning of the call, we talked
We
about
have
the
about 5
infancy of
seconds.
user behavior and the products and technology themselves.
Nice. Well, thank you so much, Talal, and thank you guys for tuning in. Enjoy the
Thanks,
rest of
Casey.
the summit. Thanks.